Do you ever get into a situation where your price action doesn't align with your indicators, and then you end up adding more indicators, and then eventually your chart kind of looks like a weird painting in a museum? Well, today I'm going to show you an easier way to do that. I'm going to show you how to trade without any indicators and just pure price action and actually be profitable. What's going on, guys? Welcome back. My name is Prince, and today we're going to be talking about naked price action trading. Before we get into it, I wanted to remind you that our spots have opened up for the free one-on-one consult. If you want some more information about that, click on the link in the description and book a call with me so we can have a chat. Okay, so this is Aussie dollar, and I'm going to be showing you a very clean example of how the market moves and how to predict what the market is going to do, and be able to take advantage of it before that happens. Now, before I get into this example, let me just quickly review again how the market moves. Now, the market moves in three ways. The market moves up, it moves down, and it consolidates, right? But let me show you how the market moves up and down most typically. Now, usually when you look at a chart, the market is going up, it's moving this way. It's making new highs and higher lows, if you can call it. And if it's bearish, it's making new lows and lower highs. So now what we're trying to figure out, if you're trying to jump into a trade, you're trying to figure out when this happens, when this new high happens, or you're trying to figure out when this retracement happens, because these are the big moves. So you're trying to figure out when this move happens and when this move happens. And then again, you want to jump on this move and get out here, and then jump on the other one and get out here. Now, this is the one way that the market moves, right? Now, the second way the market moves in a trending market is that the market puts in a new high, and then it goes sideways. And there's a new high, and then it goes sideways, and there's a new high. Now, these two methods of market movements are completely valid. The market can do whatever it wants, right? Now, what we're trying to figure out is when this move happens, and when to get out for the retracement or the sideways movement, and then when the next move happens, and when to get out for the sideways movement. Now, again, if you've been watching my videos, you know the first thing I do is I go onto my daily time frame, my highest time frame, and I figure out what is the market doing. What do I mean by that? So, what is the trend, and where is the market most likely to be traced to? So, what are my structure, support, and resistance, my order blocks, or my supply and demand zones, essentially? How I determine the trend is I look at the most recent move. Now, looking at the most recent move on this chart, you can see that the market has been bearish most recently. The most recent move is from here to here, from here to here, and from here to right now, we are here. That is the first thing I look for. Second thing I look for, where are my order blocks? Where are my support and resistance zones? Now, this is where I draw in the green zones right down here. Why? Because looking left, if the market is looking bearish, like it is in this example, these zones are there's a lot of buying pressure in these zones. This is where the market is most likely to form some kind of a resistance. This is where the market is most likely to form some kind of a retracement. So if you're looking if you're looking in a trending market, you're looking for a retracement back into the previous support level, which is here. But if you're looking to take a counter trend trade, which is essentially what this is, you're looking for the most recent resistance zone on the higher time frame. And that's essentially what this is. Now, if we go back a bit, I'm sure if you go back enough, there's probably like another structure zone looking, yeah, see right there. If we just move left a bit, you can see there's a multiple tests there as well. But just looking at the most recent one is plenty evidence. So what we're doing here is market is bearish, but we're looking to take a counter trend buy signal in a bearish trend. This is what you call counter trend trading. So we've identified what the market is doing. We've identified our buy and sell zones. Now we drop down to the 1 hour chart. Now this is all pure price action, okay? Now since we're not taking a trend continuation trade, we don't need that zone. All we're looking at on this time frame here now is what is our reason for entry. Now this is the green zone that I drew on the daily. And all I'm looking for here is just a double bottom. If You see the market came in that zone, tested it once, tested it twice, and even tested it again. You can even call this a triple bottom or quadruple. It's tested it multiple times, right? But all I'm looking for is the first two tests. I don't need multiple tests. So in this zone, we have an initial test and then a retest. Now, this is enough for me to get into this trade. And the next question is, well, where do I get out? But if the market is obviously bearish, I don't want to hold this for too long. I want to be able to get in and get out before the market continues its trend, right? And you can see you will be right because the market did continue its trend bearish, right? So now for entry is very obvious. So we're looking for three things here: entry, exit, and stops. Entry is very obvious. You enter right here at the retest of the initial candle here. So you have the initial candle here in double bottom, and the retest is right this huge red candle here. So this is where you get in. So one question answered already. The stop always goes below the structure level. Two questions answered now. Now the tricky part is the third one. Where do we get out? Now remember we drew in the structure levels earlier. If market is retracing back into the extreme structure zones, you want to be able to get out before market gets in that extreme structure zone. You can see market came in. Sometimes market retraces past the extreme structure zones, but again, you want to be able to get out before that happens, right? So market came down, retraced, came down again, retraced. Where did we retrace to? Right in there. Market came down again, retraced. Where did we retrace to? Right in there. So this would be a very good area for you to put your target. So you're looking at least a 1-to-1 risk to reward right in there. Now, if you're a trend continuation trader, you're a trend following trader as well, you can very easily, take a buy and take a sell as well. So if your market is trending lower, you can take a sell here, go all the way down, buy it back, go all the way up, sell it here again, and then wait for the market to retrace and give you another reason for entry. So that's the first example. Second example is on the pound dollar. Now again, let's follow the same sequence, go to the daily, figure out what is the market doing. Market is very bearish. I think that's very easy to see. It's been bearish for a while. So let's figure out our order zones. Now I've already drawn this in. Look at the green zone right here. And then look at the two lines here, essentially as pointing out the major structure zone looking left. So you can see the market came in and retested, kind of double bottomed in that zone between those two lines right now. That is my counter trend opportunity right there. If there was a counter trend trade, just like I showed you in the previous one, but there was no double top in this instance, so there was no reason to get in. But the market is still bearish. So instead of taking a counter trend trade now, we're actually going to take a trend continuation trade. That's exactly what happened in this instance. So the market came down. It doesn't have to be a double bottom. It can be, anything that you want it to be that actually makes money and is valid, right? It can be a triple test. It can be a candlestick formation. As long as it is testable, verifiable, and repeatable, you can trade it. Doesn't matter. So the market came down, retested that major structure zone on the daily that I just showed you, and then reversed back into where? The extreme structure zone. You can see that it was tested here. Market broke out, came back to test it again. So this is a very huge selling area. So all I'm waiting for now is for the market to retrace back into that zone. You can see right here the market kind of put in a very clean channel. All I'm waiting for this market to retrace into that zone, and as soon as the market gets in that zone, that green zone, that kill zone, boom, you get in. Very tight stops. Now this is not a breakout strategy. This is a little bit more aggressive. You can see the market, because when the market breaks, usually if it rains, it pours. If it breaks, usually you don't get a chance to get in anymore. So you want to be in sometimes before the market runs away from you. So you can see a very clean, nice 3-to-1 risk to reward on this currency pair, based on just pure price actions, no indicators here. I mean, and I know there's an indicator down here, and that's just for my purposes. But for the sake of this video, forget this is down here and just focus on the pure price action movement that is happening here. This is beautiful. This is beautiful right here. And then finally, dollar yen. Now, if you remember, I told you in the start of the video that the market moves in trends. The huge new structure high and then the outside return, and then new structure high and the outside return. But sometimes the market puts in a new structure high and then a sideways consolidation, and then a new structure high and then a consolidation and then a new structure high. Both of these are completely fine. Market can move in that way, and this is an example right here that I want to show you. So anytime you see these yellow lines, these are essentially how I draw in my structure looking left. So my structure resistance zone looking left. Now market was a bit bullish here, and there was a little bit of a consolidation looking left. So all I was waiting for is for the market to break out of this zone right here. If I just drop in an arrow, market was down here. All I was waiting for was for the market to break out of this zone for me to get into a trade. And this is where the second part of that trend movement comes in, the break to the upside and then the consolidation. So you can see this is exactly where I was looking for the market to break out, and then market finally broke out. And what do we have here? This is just a very simple trade. You're waiting for the market to break to the upside, break out of the major structure support zone. You're waiting for the market to either retest or consolidate, and either one you get, you know what you're about to get, right? If the market was to turn around and come back down to retest that yellow line, I know I'm not going to get this. But if market was to start moving sideways and give me kind of like a channel, that is a very good chance for me to go long, put my stops just beneath. And then again, there's another yellow line up here. What does that mean? That is another area of resistance that the market is most likely to test. Now you can easily either put your target there, or you can just trail this trailing stops. If you don't know what trailing stops are, look through my videos. I'm sure I've done a video on that. You can just trail this again to the next structure resistance zone. Now look at that 8-to-1 risk to reward. Now that is how you trend trade. So guys, that is the end of the video. Hopefully that made sense. If it didn't, go back and rewatch the video again. There's a lot of nuggets in here. Hopefully you get some value from it. And I will see you guys in the next one. And if you want to speak to me one-on-one again, there is a calendar link in the description. Click on it and schedule a call and have a chat with me. So guys, I'll see you in the next one. Peace.